Well, Telstra's profit slide is steeper than analysts had predicted. Here to take a closer look at the numbers is Roger Montgomery. Good to see you, Roger. Thanks for coming.
Nice to be back.
Now, is this a case of profits are down because Telstra has had to spend up to catch up?
Well, yes, but really nothing's changed for the last decade. We've had a business here that has seen enormous growth in the use of mobile phones in Australia, enormous growth in the take-up of the internet in Australia over the last 10 years. And enormous penetration of pay TV. Telstra has had exposure to all of that, and yet its profits today are less than they were a decade ago. So there's clearly pressure on the business long term. This isn't just a one-off. And when we look at the cash flow of the business, it's much, much worse.
All right, well, let's hear what CEO David Thodey's had to say about winning new customers over the last 6 months.
We're seeing very strong sales results in the first half. We now have almost 1 million additional Australians choosing Telstra in the last 6 months. And we went back over the records and we went back 10 years. We've never had as strong a 6-month period.
David Thodey, they're trying to put a good spin on these figures. But where's the main problem?
They're becoming very polished at that, aren't they?
Yes, they're used to it. Where's the problem?
Well, the issue is it's a very expensive business to run. It's all very well signing over 1 million new customers, but if you're not making any money out of them, what's the point? And this is a business that generated operating cash flow of about $2.9 billion, but it spent $1.4 billion on just maintaining infrastructure and plant and equipment and those sorts of things. It's also front-loaded its revenues. And it's done that because people are paying off their phones. They're buying the phone, if you like. So the accounting means that the revenues look better than they actually are. And then it paid dividends of $1.7 billion. So it's down $200 million. And they need to borrow additional money to actually make up that gap. So this is a business really that isn't getting better. Having said that, though, Australian fund managers like myself, they don't have many things to buy in Australia, so sometimes they're just forced to buy this, even if the story looks better, but the real numbers aren't.
So for the shareholders, hang on to the stock for now?
Well, the bad news has come out and yet the share price hasn't gone down, so it may be that the share price ends up going up, even though it doesn't deserve to.
And just very quickly, what about that deal on the National Broadband Network? How will that affect the bottom line?
Well, there's some talk that it could be a June or July vote on that issue, but I think the company's being a little bit optimistic. I think it'll take longer.
Roger Montgomery, thank you.
Thank you.